Money, what is it really? Is it cash, US dollars, euros, gold, silver, short-term treasuries? What is money? Also, of all those things mentioned, what is most likely to preserve exactly what your purchasing power is? Not make money in a speculation, not have an investment. What is most likely to preserve exactly the purchasing power of your wealth today in a year, 2 years, 5 years, 10 years? We cover these topics and a couple more in the upcoming video. Barely Bullish takes on money. Money has a lot of characteristics and definitions. Let's go through a few of them.
Well, I know if we talk about Mike Maloney's Hidden Secrets of Money, I think he gives what are there, 7?
I think he gives 6 or 7 characteristics, and there's no one list that's exactly accurate, and you can add a lot of other descriptors too. There's a recent paper that came out that had 20 different characteristics of money. If you want to get really fancy, maybe we'll link to that. But yeah, so the ones I'm most focused on are durability. You think about bills, they're hard to tear usually, although they're flammable. Most metals are pretty durable, right? Portability, small paper bills and small coins are pretty easy to carry around. Divisible, right? You have subdivisions of smaller coins or coins that have lesser value, and you have bills of different denominations, 1, 5, 10, 20, 50. Means of exchange. You can go to a Starbucks and you can plop down a bill and you'll get something for it. Maybe a cup of coffee, maybe a little cake pop. You could do this, well, you can do this with metals too, certainly US denominated, minted metals like dimes and quarters made out of base metals. You could, if you can talk them into it, get them to accept a silver bullion or a gold bullion, but that might be a little trickier.
Yeah.
Fungible. So one is the same as the other, right? A dollar bill in my pocket is the same as a dollar bill in yours. A gold coin in my pocket is the same as a gold coin in yours, right? Or in your purse. Yeah?
I was just thinking, is that a whole lot different than store of value?
Well, that's the last one I was going to get to, which is, okay, so before we get to that, we got scarcity. Okay. Some people will add into, like, there's only a finite supply. There's an infinite supply of dollar bills now, and euros and all the rest of the currencies, but there is a finite supply of gold and silver. And last is means of exchange, which is, in many people's minds, the big differentiator between money and currency. Currencies don't hold their value. Money always does.
Right.
Especially in the long term. Okay, well, these abstract definitions are nice. They're very academic. But what is money really, right? I look at it in 2 ways. You can be either thinking that the US dollar is principally money, or your principal form of money, the primary form of money. How you think about the world is all denominated in dollars. That's how a lot of people are. There's also another way of thinking about money, of thinking about gold as your primary money. And everything's denominated in gold. My house costs this many gold ounces. The amount of gold that I have will buy this much stock, right? It's going to cost this many fractions of an ounce of gold to go to the grocery store. Just 2 different systems of thinking about it. And they both have their advantages and disadvantages, and we'll kind of go into them. But when I think about money, I think about physical gold and silver and other metals, but let's just keep it to gold for now. Physical gold, which is just physical gold coins and bars, most people are familiar with, or at least have heard of, or seen in pictures or movies, right? And then there's physical cash, which we're all familiar with, stacks of bills in our hand or in our wallets, purses, whatever, in money
suitcases.
Clips. Suitcases or briefcases full of it, right? There's digital gold or also depository gold. Digital gold being some token or currency that's backed by actual gold reserves privately. Or there's depository gold where you can put it into a vault that's owned and operated by a non-commercial bank. Depository. So it's not a commercial bank, it's a depository. Run privately, you pay fees to store it there, and they hold it for you. And sometimes you can take it at any time. You can also lend against it. You can do some other stuff with it too. So there's gold, digital gold, right? And then there's digital cash, which we're all also pretty familiar with. There's most of us have bank accounts. We have a certain amount of dollars in that bank account, and we can spend those dollars with debit cards and account transfers, checks, and all the rest, right? So the key question is, if you're trying to preserve your purchasing power, what is the best way to do it? And again, this is not about trying to make money. It's not about speculation. I have nothing wrong with speculation. It's just an entirely different subject. Today, we're really focused on how to preserve purchasing power as well as we can, right? So that you can buy in 2 years or 10 years the exact same amount of broccoli and carrots, gallons of gasoline, gallons of milk, automobile, tires, even, or parts of a house, or a new roof. You can buy all those things in about the same amount in 2, 5, or 10 years as you can today. What is the best mix to do that? What is the best allocation to do that? And the short answer is, I don't know, right? I really don't know. I don't have a crystal ball. I don't know what the state of the economy is going to be exactly in 2 years, or in 5 years, or in 10 years, or in a year. I can't tell you any of these things. I have a very pessimistic outlook on the economy. I think that inflation is probably a lot stickier than people think, and will probably be a persistent problem throughout much of the decade. Bearing these things in mind, I think it makes sense to think about holding your cash, your US dollar reserves as they are, and also having a certain amount of gold reserves. And the exact mix is going to depend, honestly, on your own personal goals and what you're most familiar with and what you're most comfortable with. And part of it, I think, is wrapping your brain around, what is money? What do I feel comfortable as money? Where do I feel most comfortable putting my capital so that I can sleep well at night and make sure that when I get up the next day, or when I get up 2 years from that day, or 10 years from that day, that I have the same purchasing power, or close to it, then in the future as I do now.
Yeah.
Does that make sense?
Or ideally a little bit, maybe a more purchasing power over time.
Could be. But again, my focus here is not on speculation. I agree that if you want to buy precious metals and think the prices are going to go up, which I think they will, if you want to speculate on that, I think that's great. But here we really are just trying to focus on preserving wealth.
Yeah.
So here's how I see it. You can be principally in dollars or principally in gold. Those are the two strongest currencies, gold being the only one of those two that's money. There is a strength in the US dollar. There's a substantial weakness in the US dollar too. There's a whole lot of dollars that have been put out to the world that will eventually have to come back to us. There's rampant fiscal and monetary easing policies. They've recently been a little tightened on the monetary side, but not on the fiscal side. Our government keeps deficit spending, and the debt grows and grows and grows. And as that debt grows, it has to be paid off, and the best way for them to pay it off is to just print off more dollars. And as they print off more dollars, each dollar that's currently sitting around is worth less. This is what inflation is ultimately, right?
Right.
But holding onto dollars is very comfortable for some people. People are very comfortable thinking about money as a dollars. Even though we came off the gold exchange, arguably in 1933, you can also argue in 1942 and also 1971, the gold exchange became increasingly attenuated. But in the last 50 years, people mostly thought about dollars as greenbacks. That's money to them. Of course, the entire time, the value of that money, the purchasing power of it, has gone down, unfortunately.
But some people are just more comfortable holding dollars.
Right. And to those people, I'd say, do your best as you can to wrap your head around the idea, even if you consider dollars are still money, try to think also of other things as money too. Just as America tends to be a little self-centered, not in a bad way, sometimes self-centered is just fine. With kind of our language and our culture, we look inward, right? We're a little bit isolationist. Most of us don't go and learn like 3 or 4 languages, right? Just like we don't learn how to transact in 3 or 4 currencies or monies. But we might consider doing that because, unlike English, which is probably going to be around for a long time, the US dollar, at least its current purchasing power, might not. And there are many factors that will probably cause it to decline in purchasing power, continue declining. And if you start thinking about other monies like gold, or money like gold, other currencies, and specifically gold being also a currency and a money, if you start thinking about gold as money too, or even instead, just kind of challenging yourself to think about it that way, you'd be surprised. Just even try measuring things in gold, maybe if you can. Just wrapping your head around that can be really beneficial. For those people who have already done that process, who've already gone and said, I realize dollars are useless. I'm not going to hold on to them, or I'm not going to hold on to very many. I'm going to really store my key wealth, the wealth that I want to hold on to for a long time. I'm going to hold that in gold. Well, to those people, I'd say that's very good. And there's a couple ways you can do that. One is you can have a certain target of gold, maybe 50 or 70 or 80%, and you can have a cash buffer so that when the price of gold declines in US dollars, maybe you pick up a little bit more, right? You don't have to necessarily go all in, whole hog, 100% precious metals. But if you want to, that can make sense too. And I will say this: if you do go whole hog in precious metals, let's say your average buying price is $1,800 an ounce of gold, which is about today's gold price. Ask yourself this question: you're 100% committed to gold, precious metals. Are you going to be happy with your decision if in 2 years the price of gold is $1,500? Right? That can happen. Yeah. The price of gold fluctuates in US dollars, and ultimately, when you go to transact with most businesses in the United States today, they're not going to take gold coins. They're not going to take silver coins. So you're going to have to cash out some of that gold to buy stuff in the event you have to cash out your savings if you don't keep a cash buffer, right? Which is fine. If that's how you want to arrange things, it's totally fine. But you have to be comfortable with that. Just as possible, or just as much as possible, for gold to be $300 below the price or above the price. Those are both possibilities. You could have gold be $2,100, and maybe you get a little gain in your purchasing power. But if you're going to go 100% PMs or 100% gold, you have to be comfortable with the idea of cashing out those PMs in the future at discounts to the price that you bought them in US dollars.
Whenever we think about inflation and the price of gold, would it not be wise to weigh that in the speculation of the move?
I think if you want to put your speculator hat on separately from this, I think that's totally fine. I understand it. It makes sense.
Maybe it's not a speculation. Let me rephrase that. Would it make sense for people, not speculation, but to fundamentally look at the price of gold right now and look at the rate of inflation and the number of dollars? And because gold is finite, or relatively finite in supply, does it not follow that there is a greater chance that the price of gold would, especially in a period of economic turmoil, rise to meet the supply of dollars?
Right, and I think that's almost an inevitability. But in the meantime, that might take a certain amount of years to happen, and we don't know. And gold price tends to lag inflation. So we can have inflation continue rising for a year, 2 years, 5 years, and the gold price continues to just kind of languish. I don't think it will, honestly, in my heart of hearts, but it could. I've accepted that fact. Also, let me make a very clear distinction. Francis Hunt has an interesting system. He has, I forget the exact terminology, but there are 3 different boxes, right? There's the box of money, savings, safe. Completely safe, leave it. That's where you keep most of your wealth, or at least a very significant chunk of it. Second, speculations and trades. He's a trader. Okay, unlevered trades, usually kept on for a long period of time for positions to go one way or the other. Third box, the hot box. So cold box, warm box, hot box. The hot box being usually very, very, very small portion of net worth, highly leveraged trades, highly speculative stuff going everywhere. The reason I think that construct is interesting is because I want to make a very clear distinction. I'm not talking about investing here. I'm not talking about speculating. I'm not talking about trading. I'm just talking about where to store wealth to make sure it preserves its purchasing power. If you have gains in purchasing power doing this, all the power to you, that's great. That's not the purpose here. The purpose is just to retain purchasing power.
So this would be like someone's savings account.
Exactly.
They're the bulk of their wealth, I would imagine.
Well, maybe it's not the bulk. Maybe people only need, depending on how much wealth they have, maybe they only want to safeguard and secure 20 or 30% or 10% or 40%, right? Maybe people want to stay, quote unquote, invested in real estate or real estate or stock markets or hundreds of other things they can be invested in that have some kind of cash flow, and they want to hold on to those. That's fine. Or they have a business, so they have a lot of net worth tied up in. Okay, great. This is just about that safest part, that core, that kernel around which you can build everything else, that you can really rely and depend upon.
And you don't want to risk losing the purchasing power of that savings.
So if you're not clearly in the dollar camp, or you're maybe thinking about leaving it, or you're not really in the gold camp yet, or maybe if you're in one of the other of these camps and you see dollars as your primary money or gold as your primary money, the real question is allocation percentages. So you have all your everything else, but I'm just talking about for your money, the stuff that you want to keep in reserve to maybe feed your family if you need to, make emergency house payments if you need to, everything else. If you know nothing else and don't feel like thinking about this any further than just watching this video, one thing you might consider, this is not a recommendation, but it's something maybe people might consider, is if the US dollar is the strongest currency and gold is money, then you take the 2 strongest currencies in existence, US dollars and gold, and you own 50-50, right? That way, if there's massive hyperinflation, your gold is going to do just fine, right? If the economy's rosy and everything kind of picks up and goes back again, your gold might go down a little bit, but your dollars will still be there for you, right? If there's a massive deflationary event, gold should probably do fine. Dollars definitely will do fine. Basically, in many different circumstances, having half gold, half cash should preserve your purchasing power. Mm-hmm. Now, is it an investment? No. Will it spin off dividends or yields or returns? No, not really. There are some programs where you can make percentage returns of gold on gold and percentage returns on cash by keeping in the bank. But in general terms, no. Not in an era of low interest rates, but it'll hold your purchasing power. You might throw a little silver into the mix if you want on the precious metal side to accelerate some of the protection power of gold. On the dollar side, you might throw in some short-term or long-term treasuries or bonds, government bonds, U.S. bonds, to accelerate, if there's a deflationary event especially, to accelerate the rise of the value of the dollar and kind of accentuate both of those things a little bit. You might do those things, but really generally half cash, half gold could make a lot of sense. And then if over the period of 2 or 5 or 10 years, just rebalance it. So if the price of gold rises from about 1,800 today to 2,500, maybe sell off a little bit of that gold and put it in some cash, right? So you kind of keep it about 50-50. Maybe rebalance it once or twice a year, once every 2 years, whatever you're comfortable with. That to me is a reasonable plan for keeping your wealth. Now, I'm comfortable holding, in terms of my money bag, my money basket, I'm comfortable having it be predominantly gold. For other things, for speculation, I have some silver, but for money, for things that I know for expenses that I might have if I've laid off for 2, 3, 5 years, that I really want to make sure I have ample savings for, I'm happy to keep it basically 100% gold. That is where I'm at. I'm very comfortable with it. I feel great with it. I understand that I might have to, in such an event, if I were laid off for 3 or 4 years, I might have to cash out some of that gold, theoretically for less than I paid for it. That could happen. I am perfectly fine with that. I view gold as the most liquid, portable asset that will definitely retain its purchasing power over time. Might it lag inflation a little bit? It might. Might short-term price suppression, whether it's intentional or not, decrease the price in gold and dollars? Yeah, it could. And then might I have to cash out during those times? Yeah. Could there be a general liquidity event when stocks and bonds and real estate and all kinds of things are being sold off, and at least for a couple of weeks or even a couple of months or years, the price of gold goes down in U.S. dollars? Yeah, that can happen. I'm comfortable with all those scenarios.
With the understanding that you can't foresee the future, do you believe there's a floor on the price of gold?
Cost of production, which currently in all sustaining costs is $1,200, $1,100 to $1,200 an ounce.
So you don't see the price of gold going below that, obviously.
If it does, then mine's shut down. But you can have this with commodities, where a commodity can be selling below the cost of production. Uranium was in this state recently when it was $25 a pound, and then it went up to about $45 a pound when its production cost, even in the cheapest mines, was about $30. You can have sustained periods of time where commodity prices are below cost of production, but they can't remain there indefinitely.
Yeah.
One of two things has to happen. Production declines, and when production declines, there's some scarcity of it, and all things, if demand remains constant and the supply goes down, the price goes up. Mm-hmm. So they say the cure for low prices in commodities is low prices. The cure for high prices in commodities is high prices. Mm-hmm. So that's where I kind of see the floor being. Could it go to $1,000, $800 an ounce of gold? Yeah, theoretically. Do I think that's a very strong likelihood or possibility? No.
Interesting.
I really don't. I see the price of gold doubling long before it has.
Yeah.
But, I don't have a crystal
on
ball.
the flip side, I can imagine a scenario where 2 or 3 years from now, the purchasing power of the dollar has fallen by 20%,
Yeah.
So it's just some food for thought.
Yeah. What do you think? Let's say you take your money that you want to have in this special little account. I don't know that you do. Maybe you don't. Maybe you don't. Mm-hmm. But let's say you have this just extra reserve, special emergency fund money. How are you going to hold that?
Well, I think I always keep a little bit of a cash reserve. Mm-hmm. But beyond that, I just take all of my extra capital and I invest it
Mm-hmm.
And so, yeah, a lot of that is in precious metals. Some of it's in Bitcoin and Hive. But again, that's not what we're talking about because that gets into more speculative.
No, that's talking about just your money pot.
Yeah, yeah.
In your money pot. So it sounds like your money pot is cash.
Cash, yeah, because I know that I agree with all of the underlying fundamental reasons to invest in gold, but I guess when I'm investing in it, I just consider that a speculation.
Mm-hmm.
But again, that's probably just because of the way that my brain works and also logistically just some of the accounts that they're in, so
yeah.
I don't hold as much physical gold or silver as others do. Most of mine, which I guess makes it maybe a bit more speculative. Most of my positions are in gold mining companies, silver mining companies, or royalty companies.
All right, you're more on the investment side of it, which is completely fine
Mm-hmm.
because she's comfortable with what she's doing. I'm comfortable with what I'm doing, and you have to be comfortable with what you're doing. And really, it depends on how much wealth you have, how much wealth you expect to have to spend, especially during a time of crisis. Some people do have the ability to kind of pull in their horns and not spend anything. They have the mobility to just move out to a shack in the woods and live for $500 a month.
Yeah.
Not everyone can do that, right? Or they can live out of their vans comfortably, not even in a bad way. So we'll see. It really depends on how much wealth you have, where you are in life, what your health is and health needs are, what your family life is, what your family needs are, needs of loved ones who are close to you. So all these things have to be taken into consideration. But these are my thoughts on it. And when it comes to allocating your money or your currency or your capital into the thing that will be there when you need it, right? When you most need it, if the economy goes bad, or even if just a bunch of assets go on sale, maybe you want to buy something, maybe you want to get that house you've been waiting 5 years to get because prices have been crazy. That pot of money, that ultimate savings that'll retain purchasing power, that you have to decide how that should be constructed in a way that works for you. So sleep on it, but don't sleep on it.